Hi, and welcome to this Premier Training revision video which will demonstrate how to prepare the financial statements from a trial balance. Hopefully you should already know what a trial balance looks like and how it's prepared. Here's an example. There would normally be many more accounts than this, but we've scaled things down a little here to make it easier to follow what's going on. In this scenario, all the year-end adjustments have been made, and notice how the closing inventory shows both a debit and a credit entry. So, getting started, let's first select all the accounts which should be transferred to the statement of profit or loss. These are sales, purchases, wages, rent, opening inventory, and the credit side of the closing inventory. In your assessment, you will probably be given a statement of profit or loss template, a little like this one, and you will need to transfer all the account balances, such as the ones we've highlighted, into the correct places. Sales always comes first. This could also be called revenue or turnover. Next, we will need to calculate the cost of sales. This is opening inventory plus purchases less closing inventory, and enter the resulting total. Next, taking this figure away from the sales figure gives us the gross profit. Now we need to list all the expense accounts. Here these are wages and rent. From these we can calculate a total for the expenses, and finally for the statement of profit or loss, taking this figure from the total for gross profit, we are left with the net profit. Now we need to deal with the remaining balances on the trial balance. These will need to be shown on the statement of financial position. Again, you will probably be given a template a little like this. The statement of financial position always starts with the non-current assets. In our accounts we just have one, for vehicle. Next comes current assets. We show these in a separate column as we'll need to use the total as part of the net current assets figure. Our current assets here are sales ledger control, bank, and closing inventory. Remember, we also use closing inventory to calculate the cost of sales in our statement of profit or loss. We can now calculate the total of all the current assets. Next comes our current liabilities. These are purchases ledger control and VAT, which we owe to HMRC. This gives us a total for current liabilities, and now we're able to calculate the net current assets, which is also referred to as working capital. This is calculated as the difference between the current assets and the current liabilities. We show this result in the right-hand column, as we will need this figure to calculate the net assets total. Now we enter the non-current liabilities. In our example, we have a loan. Now, to calculate the net assets, we add together the non-current assets and the net current assets and deduct the non-current liabilities. Be careful here to make sure you're adding and deducting the correct amounts. Now we come to the second half of the statement of financial position, the section called Financed By. We start with the opening capital from the trial balance and add the profit we calculated in the statement of profit or loss. Finally, the result should be the same figure as the net assets. If it isn't, you've done something wrong and you will need to go back and check your figures. In your assessment, you won't be asked to create a statement of profit or loss or a statement of financial position from nothing. You'll be given a basic template, but you will need to know what goes in each section. Also, if your statement of financial position doesn't balance, don't spend too long trying to find the error. It may well be that there's just one incorrect figure for which you'll lose only 1 or 2 marks. Spending too long trying to find the error could mean that you jeopardise marks in other tasks, and you can always come back to it later if you have time. Thanks for watching.